All right, welcome back to another episode of the Black Bullion Show. Over the weekend, many of you guys pointed my attention to China. Now, you may be asking, well, why is that? Well, it seems that they are playing games with their domestic investors right now. During a time of massive uncertainty, many of us, have turned our attention more and more to silver and gold. However, it seems that China, Big Brother, also known as the biggest brother of them all, or one of the biggest brothers of them all, North Korea might have them beat. They completely brushed aside Adam Smith's idea of the invisible hand for a very, very visible hand, and they are limiting the acquisition potential for gold for their domestic investors. But if you've been keeping up with any of their news recently, that's really not all too surprising. Why? Well, find out shortly. But first, if you're new to this channel, please hit that big red subscribe button right down below. Also, please hit the like button. Helps to get this economic evangelism right on out there to the masses to bring more people into precious metals. Okay, so guys, take a look at some of these recent articles, recent headlines when you type in the words China stock market into Google. You have headlines such as, let's see here, China market, extend losses. There's also froth returns to China's stock market, echoing the 2015 crisis. These two headlines from a week ago. 2 weeks ago, you had things such as China's stock market just jumped 6%. Also, China in school, no masks, no in a runaway stock market. So some of you may remember that a couple of weeks ago, the Chinese government gave domestic investors a little nudge here and there, a slight suggestion, if you will, to invest heavily into their local market. Now, of course, what ensued was froth. And what would you expect after coaxing your public to invest? I mean, honestly. And again, there's a difference between the invisible hand and China's very, very visible hand. It's so visible that we can see their cards, and no amount of a poker face can hide that. So naturally, as losses extend, investors like to seek safe havens. But what happens next, you ask? Well, check this out. Major Chinese banks bar customers from buying gold, precious metals. And of course, again, when investors went out, or when investors, start to, get those losses, what do you do? You gotta find some alternative. But apparently they've been barred from seeking some of those alternatives. So let's see what happened here. I'm going to read this quick quote. Starting Friday, the Industrial and Commercial Bank of China, ICBC, the country's biggest lender, has barred customers from opening new trading positions for platinum, palladium, and index products linked to precious metals. For ICBC, precious metals include gold, silver, palladium, platinum. Transactions can be made in various currencies, including the RMB and US dollars. A reporter called the bank to inquire about the reason for this prohibition. The bank's customer service said it was for the safety and protection of customers due to heavy price fluctuations of these assets recently and the need to control risks. Two other big four Chinese banks have made a similar move. So, isn't it funny, guys, how they claim that they want to protect their investors from risk, yet they encouraged their investors just 2 weeks ago to get into their local markets. And again, what is reward without having to undergo risk? So that is encouraging risk. And of course, shortly thereafter, there's domestic investors start to feel the pain as some of those losses start to take place. So why worry about an investor's risk, risk probability now? Well, I'll let you guys answer that in the comment section below. Thanks again for watching. Please hit that like button. Please subscribe if you're new. It's Black Bullion.